Hey, how's everyone doing? It's a fantastic day in crypto today. The markets are up by 4.10%, up to 1.75 trillion in its market cap, after a significant drop in market cap in the last 3 to 4 days, where the market cap it reached about 1.6 trillion. Everything is basically up. Bitcoin is up, Ethereum is up by 7%, Solana is up by 17%. We'll speak about that a bit later. Luna is up by 12%, a correction after a 34% decrease in the last 2 days. Polkadot up by 10%. Yeah, the markets are up, the markets are healthy, they're looking good. And without further ado, we will look at some news. Bitcoin network transaction volume surpasses American Express. A new research paper has found that the annual transaction volume on the Bitcoin network surpassed some of those well-known card networks such as American Express and Discovery on 2021. This report stated that Bitcoin processed $3 trillion worth of payments during 2021, placing it above popular credit card networks such as Amex, which processed only 1.3 trillion, and Discover, which processed half a trillion. They also say that Bitcoin settled more transaction volume in Q1 2021 than all credit card networks combined for the entire year. So the Bitcoin network, in terms of purchases, in terms of sales, in terms of staking, in terms of swapping, has processed more transactions in the first quarter of 2021 than all credit card networks combined for the entire year. So only in those 3 months of 2021, the transaction volume was greater than all credit card networks combined for the 12 months that surpassed in 2021. And this is insane because a payment network that just had its 13th birthday, Bitcoin, surpassed American Express, which issued its first card in 1958, and Discover, which issued its first card in 1985. So just imagine when Bitcoin is as old as American Express in terms of issuing its first card. Imagine when Bitcoin is 63 years old. I think the transaction volumes will have widely overshadowed these big credit cards, and the Bitcoin network still has a long way to go before catching up to Visa and mastercard, which processed 13.5 trillion and 7.7 trillion transactions respectively in the same period. I mean, Bitcoin is still new. Visa and mastercards are the king of debit and credit cards and transactions in terms of point of sales. But with time, when Bitcoin turns 63 years old, for example, the transaction volumes will be way over $13.5 trillion. I think it may be even 10 times that, with the way that it's growing year on year on year. Fidelity, which is a multinational brokerage giant, says that Bitcoin is a superior form of money. It says that Bitcoin should be treated separately from the rest of the digital assets because it is fundamentally different from all other digital assets which are trending in the market, and that no other digital asset is not even going to get close to overtaking Bitcoin as a monetary good. Fidelity's research stated that Bitcoin is a superior form of money rather than just technology. It is the most secure, it is the most decentralized form of any asset, and any improvement will face necessary trade-off. So they say that Bitcoin clearly possesses a lot of good qualities of money, combining the scarcity and durability of gold with the ease and storage of fiat. So it combines the best characteristics of both gold and fiat. It puts it in one, and that's called Bitcoin. So that's why it's such a perfect monetary tool. There is a quote that they stated that we won't be so bold as to predict that there will only ever be one money, but we do believe that one monetary good will come to dominate the digital asset ecosystem due to the very powerful effects of the network, and also by extent the first player advantage that Bitcoin had, as Bitcoin was the first ever major cryptocurrency. I remember in 2015 or 2016, Bitcoin had 80 to 90% of the market dominance. Now it's down to 42%. But at that time, it had the first player advantage played into its hands. Also, to close off, Fidelity stated that Bitcoin is an entry point for traditional investors into the digital asset markets, and suggested that investors should incorporate two different forms of investing in digital assets. One form should be focused on Bitcoin as a monetary good or as an asset class, and the second one should be focused on the rest of the digital assets that exhibit venture capital-like properties. So one would be using Bitcoin as a monetary good or money, and the other one should be other digital assets such as Ethereum, which could be used for smart contracts, or Luna, which can be used for staking, or Sandbox, which could be used for the metaverse. And the king of it all could be Bitcoin, and the cryptocurrency equivalent form of money will definitely be Bitcoin going forward. So Binance, the world's leading cryptocurrency exchange by trading volume, announced that its secure asset fund for users reached a $1 billion valuation. The User Protection Insurance Fund, it was set up in 2018 to protect users' interest in case of fraud, in case money got lost, in case Binance got hacked. With this, Binance committed 10% of all trading fees that it earned towards SAFU, or the Secure Asset Fund for users. And they're very transparent about it. They revealed the two wallet addresses where the funds are being held in order to ensure that people are aware that 10% of all the fees are going there, and it's not just a lie. And it makes people and users of Binance feel more secure, which in turn increases business for Binance, because such a secure crypto exchange in a world where there's no regulation means that our money is safe here. So Changpeng Zhao, the CEO of Binance, urged other crypto platforms to follow on their footpath and reveal the details of their emergency insurance funds as well. He said doing so would make them more transparent and would help them showcase their commitment to regulators. So regulators definitely want to protect users' interest. They want to protect the common man's interest. So having an insurance fund, or having a fund in the case of hacking, in the case of fraud, in the case of loss, would definitely be a requirement once regulations come into play. And preempting this, having this fund before regulations set off, will show regulators that these crypto exchanges are actually very serious. These crypto exchanges are very good, and talks of regulation can involve those crypto exchanges in order to provide succinct and mutually beneficial regulation for users, for the exchanges, and for the government. As I said before, in the absence of clear regulations, crypto investors and traders in many countries are solely dependent on crypto exchanges' security measures to safeguard their funds. However, some of the most notable crypto platforms have been hacked despite the promised security, with millions in users' funds getting lost. The role of user insurance funds becomes critical because, for example, earlier this month, Crypto.com suffered a $33 million loss after a hacker managed to siphon funds from 483 user accounts. So Crypto.com then claimed that it compensated users who lost their funds. A very important step, because it could happen with Binance, it could happen with anyone. And the fact that they have enough funds to compensate users is very important, and it brings trust. So India is to levy a 30% tax on crypto income, and its CBDC, which is the digital rupee, will launch between 2022 and 2023. So India's Finance Minister Nirmala Sitharaman announced a 30% tax on any income from the transfer of virtual digital assets. And I mean, they also said that the digital rupee will be issued in 2022 or 2023. It's the first time that the government has committed a timeline on the launch of its CBDC. This is because there has been a phenomenal increase in the transaction in virtual digital assets, and the magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime and also regulation. India has been consistently pushing for a framework for regulation in terms of digital assets. They've consulted with big blockchain companies, big crypto exchanges in India, in order to come together and create a framework for a future set of regulations, which is very important because having the input of the players in the digital asset world will give regulators a clear picture of what to include and what not to include, and what would hurt them and what would not hurt them, and at the same time what would hurt the common man and what wouldn't hurt the common man. Solana surges 17% after Coinbase lists two Solana ecosystem tokens. It regained $100 and above level after Coinbase listed two other tokens in the Solana ecosystem. So Coinbase said that it would list Orca and FIDA, tokens of Solana-based decentralized exchanges Orca and Bonfida. The move marked the first time non-Ethereum assets were listed on Coinbase. So Solana has released a ERC20 equivalent, which is the SPL, which are rules and regulations governing the tokens that are in each ecosystem. So ERC20 governs the tokens that are in the Ethereum ecosystem, and SPL governs the ones that are in the Solana ecosystem, so that all the tokens in those ecosystems work in harmony and they follow the rules of the ecosystem, so that everything goes smoothly and nothing in the ecosystem goes wrong. If you look at this, Solana was trading at around $90, $95, $90. However, it spiked all the way to $107. It's important to keep in mind that the relative strength index, which is a price chart indicator that determines the magnitude of price changes over a period of time, has reached overbought levels, indicating that a brief correction could occur soon. So this jump here was due to the news that 2 new Solana ecosystem tokens would be listed in Coinbase, and a lot of this is hype. Part of this might be leverage being flushed out of the market, so the bearish leverage being flushed out of the market, and due to the massive increase, it was overbought. The response was exaggerated, which means that it would correct itself back down to between 100 and 105, as we see that it is the supports and resistance level looking at the past before the prices went down. And on a lighter note, in a more funny trope, stablecoins won crypto markets in January with 0% returns. So stablecoins are pegged to the dollar. They don't really move much. They will move 0.1% or 0.2% at most, but they usually remain pegged to the dollar at 0%. And they have overperformed all asset classes, including stocks, because they earn 0%, while all asset classes are in the negative territory. So among cryptocurrencies with over $10 billion in market cap, the top 4 performance during the month were all stablecoins. By simply holding to the dollar, those digital assets avoided one of the worst ever starts of the year in cryptocurrency markets, as Bitcoin and an extension, the cryptocurrency market fell by 17%. So in essence, it doesn't mean that they overperform the market intrinsically. It just means that they retain their value while the value of cryptocurrencies dropped by almost 20%. However, there is a caveat to this. If one sees the markets are going down, the best thing that you can do is sell your crypto, convert it into stablecoin, and then while the markets are in turmoil, while the markets are going down, you stake it, and you can generate an attractive yield of 8 to 15% depending on what stablecoin you're using, which is much higher than what your bank is offering on your fiat, which is 0 to 1%. So when you hold them, you don't really get any returns from it, but if you stake it, you'll get returns of it through yield. And that's why we say that stablecoins are overperformed or outperformed, if you can say, the whole crypto market with 0% returns. Incredible scenes. It's something that is crazy to think about in the financial world, because 0%, meaning overperforming, doesn't make any sense logically. But as I said before, the markets are down, stablecoins maintain their value, meaning that if you held stablecoins, you're in a better position than if you held any cryptocurrencies. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like. Please hit the subscribe button, share the video with your family and friends, or you can even share it to strangers. It doesn't matter. But once again, thank you for watching. I'll see you tomorrow for the next one. Invest wisely, and cheers.